The other thing the Chief Economist said there was that it looks like people are going to, in New Zealand, move away from using housing as a means of providing for their retirement. Yeah, I've been hearing that a few times over the years, and it's been wrong every time. Well, hello again, everybody. Just a few days ago, we saw the Reserve Bank's chief economist make some comments about the housing market in New Zealand, and I guess a couple of interesting things in there. One comment he made was that when house prices have fallen 15% from their peak of last year, the Reserve Bank will no longer consider that house prices are unsustainable. They've said, yeah, unaffordable for many, definitely, that's a totally different thing, but unsustainable in terms of possibility of crashing, causing financial turbulence, threatening a banking sector, etc. No. And that to me is relatively important. It suggests that once we do see prices down maybe another 5 to 7% or so, that we could very easily see the Reserve Bank change the LVR regulations. And they may especially look at easing them up because of what we're seeing happening in the marketplace at the moment, where once again we're seeing a repeat of what happened in November last year. You may recall that from November last year, banks could only have 10% maximum of their new housing lending where the deposit was less than 20%. Previously, they could have up to 20% of their lending at low deposit. And a number of banks realised very early in November that the way things were going, they were going to breach that 10% limit. And so they simply slammed the door on new low deposit lending and in fact stripped away pre-approvals which they had already given. Now, we've got another version of that happening right at the moment where banks have realised that because the volume of mortgage lending overall has come down, the proportion there that is low deposit, which about half of the lending to young people tends to be low deposit, the first home buyers, it risks blowing through the 10% limit. And so we've had the banks once again create a bit of a credit crunch out there because of the Reserve Bank's limit on LVR lending. And of course that's going to create some greater problems for the first home buyers in particular, and leave a bit more space there in the market for the investors if they're interested in doing any buying. So like I say, I think that possibly before the end of this year we could get a tweak and easing up on the LVRs there. The other thing the chief economist said there was that it looks like people are going to, in New Zealand, move away from using housing as a means of providing for their retirement. Yeah, I've been hearing that a few times over the years, and it's been wrong every time. And I guess from my surveys, I can see some evidence that investors are showing no interest in moving away from housing. In fact, each month in the real estate agent survey I've been running for a couple of years, I asked them, are you seeing more or fewer investors as buyers? And ever since March last year when the tax rules changed, the investors as buyers have stood back and they've stayed standing back, so that really hasn't changed. But what about investors as sellers? Well, for much of 2021, we'd usually have about 25 to 30% of the real estate agents saying, I'm seeing more investors looking at selling. Well, the most recent result is 17%. The month ago, it was about 18%. 2 months ago, 20%. I'll repeat what I've said previously. There is no flood of investors selling property into the market. They consider it a good long-term investment to help fund their retirement, and I would suggest that many Kiwis are going to remain of that view going forward, because even though we've got interest rates going up, and then they're probably going to fall next year, I'll maybe talk a bit more about that next week. Even though they're going up a bit, they're still not going to be very attractive for a lot of investors out there. I still think housing is going to remain a key focus for many people, especially of course with the government's research showing that if you retire owning your own home, you're in far better shape than people who don't. So I don't think there's going to be a voluntary movement generally towards renting. And of course, historically house prices have risen well above the rate of inflation and above wages growth, and I think that's going to continue in the future, though not quite at the 7% per annum that we had seen in the past. So interesting days when it comes to the housing market, and just be aware we are still in the maelstrom of negativity in at the moment. Markets move in cycles. This cycle will turn back the other way after a flat period, but I think generally bottoming out sometime in the first half towards the middle of 2023. All the best.